Welcome to Financial Insights in Minutes, where we dive into the trending rental investment strategies.
Today we'll explore expert insights on the best cash flow real estate markets for 2024.
And we'll discuss the potential implications of a housing market crash and how to safeguard your investments.
Plus, find out how leveraging AI-driven insights can save you hours of research.
So stick around as we unpack the latest trends in the housing market.
But first, let's hear what Todd has to say about the best cash flow rental markets for the upcoming year.
The recent surge in interest rates is certainly alarming. Let's delve into what this means for the economy.
Absolutely. The 30-year fixed mortgage rate has soared to approximately 7%, indicating significant changes ahead.
What's the core message of today's discussion?
Essentially, soaring interest rates could heavily impact the market. This raises inflation concerns for 2025.
That sounds concerning. What's driving this unexpected trend?
Well, the Federal Reserve's recent rate cuts have been ineffective as market expectations shift.
Let's focus on those interest rate changes. What's occurring?
A record increase in mortgage rates signals growing anxiety about inflation.
How are these rates affecting investors?
Investors are enduring significant losses. Some have to sell at a six-figure deficit.
What are the broader economic implications?
Unfortunately, rising unemployment and falling prices could be looming on the horizon.
What's in store for investors going forward?
Expect more sell-offs as many investors reassess their portfolios amidst rising costs.
And what about price trends?
We might see prices drop, creating new opportunities for homebuyers.
To sum it up, what should viewers keep in mind?
Stay alert. Rising rates could lower housing prices, presenting unique buying opportunities.
Absolutely, monitoring local markets is essential. In this segment, Mike Maloney shares critical insights on an impending market crash. Get ready for an in-depth analysis.
That's right. Mike identifies parallels between today's market fluctuations and those leading up to major downturns in the past.
What's Mike's main thesis concerning the current economic climate?
He argues that we are on the verge of a significant crash due to intentional Federal Reserve-induced bubbles.
How does he substantiate this view?
He references historical episodes where irresponsible monetary policies catalyzed severe market corrections.
Mike stresses the Fed's role in currency creation. How does this affect the economy?
By manipulating interest rates and the currency supply, the Fed destabilizes market equilibrium.
What historical references does Mike draw upon?
He cites the financial crisis of 2008 and earlier market collapses as cautionary tales for the current situation.
What economic indicators concern Mike?
He highlights soaring national debt and increasing interest rates as serious alarm bells.
What will occur when these bubbles eventually burst?
Mike warns of severe economic repercussions that will impact everyone.
How should investors prepare for a possible crash?
Mike advocates for gold and silver as safe haven assets to protect against inflation and market volatility.
What predictions does Mike have regarding the economy?
He anticipates a harsh recession stemming from the collapse of these artificial bubbles.
What's the outlook for gold prices?
Mike predicts a surge in gold prices as investor confidence continues to wane.
To conclude, what critical takeaway should viewers remember?
Be prepared. Market corrections are imminent, and safer assets like gold may be pivotal in preserving wealth.
Today, Ken McElroy examines the state of the real estate market, highlighting essential trends and investment strategies.
He emphasizes that the market is ripe with opportunities similar to those following the global financial crisis.
What's Ken's main thesis on real estate right now?
He asserts that increasing interest rates have diminished property values, creating a lucrative buying opportunity for savvy investors.
That's fascinating. Can he elaborate on how these dynamics are reshaping the market?
Absolutely. As mortgage costs rise, buyers are compelled to seek properties with better cash flow, consequently lowering their offers.
How have rising interest rates influenced this scenario?
Higher rates equate to increased mortgage payments, significantly altering cash flow calculations.
So is this a golden opportunity for prospective investors?
Indeed, properties are now being offered at more accessible prices, enhancing cash flow potential and yield.
What impact does location have in today's market?
It's critical. Areas experiencing substantial job and population growth will see demand positively affecting rental rates.
What are Ken's predictions for the market in upcoming years?
He believes that while the market may remain softened for some time, significant growth could occur by 2025.
What about the recovery of property values?
Once new units are leased and the economy normalizes, values are poised for a notable rebound.
To sum things up, what key message should our viewers take from Ken's insights?
Invest wisely, focusing on properties with strong cash flow and fundamentals as the market evolves.
The housing market is on a wild ride. Let's explore the reasons behind skyrocketing prices this season.
Indeed, low inventory coupled with high demand has stirred up competitive bidding wars.
So what's this video's underlying thesis?
Experts suggest that this frenetic activity isn't just a temporary spike. It indicates deeper structural issues in supply and demand.
Interesting. What specific factors are driving this surge?
Low mortgage rates and a shortage of available homes are primary catalysts for this upward trend.
First, let's discuss the market's current state. Some areas are witnessing a meteoric rise in home prices.
Indeed, several markets are observing sharp price increases due to limited supply, creating a favorable environment for sellers.
What strategies should buyers adopt in these competitive conditions?
Buyers must act swiftly and often bid above the asking price just to stay relevant in the fray.
And what about sellers? It certainly must be a great time to sell.
Absolutely. Sellers should strategically price their properties to exploit current buyer demand.
Amidst this enthusiasm, are there any hidden risks to consider?
Definitely. Rapid price escalations may lead to market corrections. Investors should proceed with caution.
Let's not disregard interest rates. How do they factor into this?
Increasing interest rates could reduce purchasing power, potentially cooling off this exuberant market.
What predictions do experts have for the upcoming months in the market?
They anticipate a possible stabilization as sellers align with demand and restore some balance.
Sounds like a welcome change for potential buyers.
Precisely. A more balanced market would alleviate some pressure on buyers.
Which long-term trends should viewers keep an eye on?
Demographic changes and technology will significantly affect market demand and purchasing choices.
To conclude, what's the main takeaway?
Navigating this unpredictable market necessitates a strategic mindset from both buyers and sellers.
Being informed will be crucial as the market continues to evolve. Today, we're exploring a hidden gem in the real estate market, the Great Lakes region. Right, Ashley?
Absolutely, Dave. Many still perceive it as the Rust Belt, but there's immense potential here.
What's the core argument here, Ashley?
Investing in the Great Lakes offers stability and substantial cash flow potential, especially compared to other markets.
Interesting. What makes it particularly appealing for investors?
Affordable property prices and the rise of emerging industries foster growth, crafting an enticing real estate landscape.
So affordability plays a major role. Can you elaborate?
Definitely. Lower prices enhance cash flow potential while maintaining rental quality.
What industries are flourishing here?
There's significant growth in technology and water technology, fueled by research institutions and revitalization efforts.
How does climate influence investment decisions?
This region is among the lowest risk areas for natural disasters, rendering long-term investments safer.
Looking ahead, what do you foresee for this region?
With ongoing investments in affordable living, an influx of residents could boost cash flow.
What's the key message for viewers?
This region harbors immense potential. Capitalize on unique investment opportunities before they rapidly escalate.
A strategic approach could yield significant rewards as trends shift towards affordability. What an insightful discussion today. We heard from Ashley Kerr about the hidden potential of the Great Lakes markets.
Yes, and Ken McElroy really stressed the importance of positioning yourself strategically as cash flow opportunities emerge.
Meanwhile, Mike Maloney brought a cautionary tone, warning of impending crashes due to Federal Reserve policies.
Right, and let's not forget the ongoing discussion on rising interest rates and their potential implications for homebuyers.
Absolutely, it's a complex landscape, but identifying pockets of opportunity in this turbulence seems key.
For our viewers, that's actionable insight. If this information helped you, hit that like button and subscribe for more.
And don't miss our next video featuring more experts who will guide you through these changing tides. Until next time, happy investing.
See you soon, and be sure to check out other invaluable content to keep you informed.